You've been watching decentralized finance for a while now. Seen some people make a fortune, others lose everything. You want to get involved now, but the complexity is insane. The risk, unbearable. Let's face it, you have no time to specialize in decentralized apps, and no money to lose either. Well, there is an easy way to earn returns from DeFi. A solution with no trading involved, no hassle. A place where you're always in control. Just deposit funds and watch your savings grow. We're talking about an app. We're talking about the Yield app.
Hi everyone, big apologies to anyone that was just watching the beginning of our live stream. We had a technical difficulty and we were rudely and aggressively taken offline. I'm very sorry about that. So we're going to pick up again, but just in case you are new to this particular show, my name is Rebecca Jones. I'm head of communications here at Yield app. I'm joined by our CEO, Tim Frost. Also Kevin Bradford, who is a yield and crypto whale expert, and Piotr Ostapowicz, because I'm terrible at names and I'm apologizing in advance for getting it wrong. But he is Poland's leading crypto influencer and he has lots and lots and lots to say about what's currently going on in the market. So we're going to pick back up. We were talking about what the crypto whales are doing at the moment and in the current situation. And Piotr, you were showing us a really, really interesting graph. Would you mind sharing your screen again so that we can just share that?
Yeah. Let me do
Great.
that.
Perfect. Piotr joined. All right, here we go. Do you want to run us through again the trends that you're seeing at the moment in terms of the current situation?
Right, so maybe let's start from the number of addresses with a balance of over 100 Bitcoins on them. And as you can see, actually, we have here a pretty stable situation. So there is not many people actually selling. We can call people with 100 Bitcoins plus whales at the minute, because they actually can make some impact on the market. And this here situation is a pretty stable. However, we need to really look on the wallets with 1K plus Bitcoins on them. Why? Because actually this sell-off which we have now, it seems it's being caused actually by them precisely, and also by the bigger ways, but I will show that in a second. However, at the minute, as you can see here, the trend is still clearly down and we don't see any signs of recovery yet. So if we are looking on a short-term perspective, I would be pretty cautious yet. However, I have a few charts more to show you that may show some different pictures, and then you may decide for yourself. And we can see here wallets with 10K Bitcoins, which are biggest whales in the market. They were also selling actually since actually November 2020 till actually May. And what you can see here actually on this last sell-off, they started accumulating again. We have a few whales actually with over 10K Bitcoins on their balance actually came to the market within last 3 days, which means actually something is happening behind the curtain. However, the whales wallet, that's the one thing, but we need to look at the few more things, I believe, because this is actually not a full picture, so I would like to understand. Another thing is a Bitcoin exchange reserve on the exchanges. We could see actually from the summer 2020 the actually accumulation period here straight to the May 2021, which obviously caused this massive rally on the crypto market. However, when we see the days when we see the people actually sending Bitcoins back to the exchanges, we can actually expect the drop. That's why actually I believe these charts are pretty helpful. And if you wish, you can use them for free. CryptoQuant, the free version on a daily interval is free, so you can have a look for yourself. However, this sending Bitcoins to the exchanges caused this sell-off, but this time what we can see on the market, we have this kind of a consolidation for a Bitcoin price, and also we can see here quite stable Bitcoin inflow to the exchanges, and a little bit we can see here, a little bit we're starting to trending down, which means people slowly starting buying Bitcoin again on exchanges and sending them back to their wallets or to the cold storages, which is also good sign at the minute. Also, when we see a net flow on exchanges on a daily basis, we could see during this whole period of consolidation after crash, we can see here that there is so much Bitcoins being bought on the exchanges and being actually sent away from the exchanges, which also means people actually starting to hodl again, because just before this crash here, we could see loads and loads of inflows to the exchange. So this little chart, all of us, I think, should actually look, if you are looking, of course, for a short-term perspective. And last thing, but not least, here is that's the chart from Willy Woo. It's not yet live, not yet available for everyone. However, this chart shows what's the difference between long-term hodlers and short-term hodlers. When I say long-term hodler, they're all hodlers, all wallets holding their Bitcoin at least 155 days. Short-term hodlers, there are hodlers that are holding the Bitcoin less than 155 days. And here we can see a direct correlation with the price and what strong hands are doing. So in a past, we could see the similar situation as of now. That was in January when we have this correction in the market. However, we could see still the strong hands, which we can read long-term holders, still were accumulating, which actually caused bullish divergence, which obviously caused further growth on the price. However, when we see that ratio is being broken and we have a more short-term holders in the market and a long-term holders starting to dump their Bitcoins to the exchanges, we can see obviously the price drop. However, this time we have a similar situation as of January, so we have a price going slightly down, but the strong hands actually during all this consolidation period starting to accumulating, which I believe is a good sign. But still, it's too early to celebrate because especially with that 1,000 plus BTC wallets, there are still actually, here we can see clearly they still want to sell their Bitcoin. So it all depends on who wants to buy this Bitcoin, or if they're already stopped and we can see the recovery in the next days or weeks, or now we just have to wait. For myself, when I see such actually cross information, because some of them are good, some of them are bad, I just stay with my DCA strategy, and when I see the bigger down, I just buying a Bitcoin back from the market. What do you think?
So, I mean, so that is indicating effectively that we don't really know what's happening at the moment. There could be some holding, there could be people positioning to sell. Like I mean, is that what that's kind of showing in a nutshell, that we're just not really sure right now?
Yeah, market is very, very uncertain now. And still, if we can view on a fear and greed index, we can see market actually is still in fear. So the fear is the environment, actually people making emotional decisions. And emotional decisions, when there are some bad news coming from the market, they're usually selling. And same opposite, when we have a full bull market and there are some good news, they're buying like there is no tomorrow.
Right. I mean, that kind of speaks a little bit. We had a chat beforehand, and Kevin, you mentioned, this is kind of, we're seeing a typical market cycle kind of play out. I was saying, God, I wish it would just crash and we could get it over and done with. But like we're kind of in that psychological, play. Like, I mean, what are you seeing? You look at a lot of these kind of really big investors and you speak to them. What are you seeing?
So from my perspective, all that data is clear, right? Like I totally agree. The data, you can't really argue with it because these are great sources, Glassnode and stuff. So it's kind of, I think there's multiple things that are important, but kind of, when we look at people selling Bitcoin, like where are they going? I don't think the smart money is now disappearing back into fiat land. I think they're staying in the ecosystem in terms of stables. They're using products like Yield App, like other, some other competitors. They're using DeFi. And they're absolutely crazy, right? If they do go back to the fiat side, because there's literally no yield and collapsing velocity and everything else that's going on there. So that, yeah, I totally agree on a short-term perspective. This is, I mentioned this a long time ago. I thought I knew this cycle wouldn't be like 2017 style run where we just had the hockey stick, if you want to call it, all the way up. I knew it was going to be a little more tricky to navigate. The time element now is very hard, and the market is just on a knife edge either way. So we don't really know which way we're going to go. So we need to just err caution, I would. And I wish we could have some kind of stablecoin analysis to see kind of how, is that money flowing in and out of the ecosystem. My bet would be it's all in stables, yielding and working for people. So that's just how I see it. All the indicators point to just indecision and potentially, a little bit more downside, in my opinion, right now.
Yeah, I mean, that's interesting. That stablecoin point. We kind of touched on that before in our last show with Keith Waring, and we were talking about how maybe the slightly different, the game-changing element this time around might be DeFi and stablecoins. I mean, Tim, do you want to talk a little bit about what we're seeing and what you're also seeing personally?
Yeah, absolutely. So yeah, we do speak with kind of a lot of different funds and market makers and a lot of people that are kind of actively trading into the market. And so I think over the last few weeks, it is about uncertainty, but I would say it's the feeling that we get, or at least I've gotten over the last, I would say, 2 weeks, is that we're kind of midterm, kind of bullish again. And so there's likely to be kind of rocky times ahead for probably the next month or two. But I think still more and more people, even the bears, the previous bears, the large traders, the large funds, are kind of moving back towards thinking that there's still going to be a fall type of run. So and I said it is, I think, a different market, and there's so many different economic factors worldwide that are just kind of pulling this market in all sorts of directions.
Yeah, I mean, the last time we spoke, we were quite convinced by Keith's argument, and he was saying we're going to see a full 80% pullback. It's going to be brutal. We're going to go down to 12K. I mean, coming back to you, Piotr, how do you view that kind of extremely apocalyptic view? I mean, do you think we're going in that direction long term?
I think it is possible, but really, really ultra, I would say, not probable at the minute, because I can see so many dips are being bought so quickly. There's so many wicks on the charts that we can see these waves slowly accumulating. We need to remember that many people in the market, looking on the short-term perspective, forgetting that many whales, they're just rich. They have a time, which many people think they don't have. And they can play this game really, really long time. However, they are ready. We can see on the chart that they are ready actually to buy Bitcoins on the discount. And the discount sounds like this 30K is a solid bottom. However, as we spoke before with Kevin, actually half an hour ago, actually, I think there is a possibility for this week down, just to test the market, to see what's happening, and then we can join again, and we can talk again what next. But at the minute, I think that the whales are pretty happy to buy Bitcoins at these prices.
Okay. And then, I mean, looking at the retail investor, I mean, we saw a lot of charts last time, and we've seen a lot of them in the press about, the sell-off really being kind of a shakeout of retail investors. But I mean, Kevin, from your view, you're quite active on Twitter, and you're doing a lot of advocating for retail investors to get involved in kind of DeFi and stable coins. I mean, do you think that retail investors are just staying away at the moment, and what we're seeing is kind of really whales dominating right now? Or, I mean, what do you think?
Yeah, like the more capital that flows into these markets and the more participants, the more vicious and the harder it's going to get. Like people have always said, as the market cap increases, the volatility will dampen. But a lot of people have a lot of power and economic mass, as Piotr's just said. So like we have to bear that in mind. And this is just a big shakeout of who's here for the long term, who actually understands what they're buying, who understands how to generate yield and run their portfolio as a business, rather than just trying to hit a 2x or a 3x and then just sell and go back to the bank. So it's just a short-term event in that instance. So yeah, it's just basically like who's here for the long run, who actually understands what they're doing, and the rest of the market participants need to be buying stable coins, and they need to be generating yield, not taking risky positions, not doing anything crazy, and basically just letting their dollars work for them in a safe, platforms like this one, like then there's others in the market, and you can use DeFi if you understand what's going on. That's my recommendation to everybody. If you're new, just buy dollars and earn a 20% yield. Like if you're 20% up at the end of the year and then lost nothing, like that's a great result, right? So that's the type of approach that I try and teach to people, not to buy risky assets that might cut in half 60, 70, 80%.
Right. I mean, and on that subject, and this is probably for both Kevin and for Tim, like, where is the blockage in getting people into the retail investors into stablecoins and into DeFi? Tim, first of all, where do you think the blockage is? And then I just want to jump back to you, Kevin.
I think just being comfort, having digital dollars and holding this and holding their wealth and these digital dollars, especially around Tether. It is, I mean, and for good reason. I mean, it is it's going to take a while for people to be comfortable, and probably we need to see guess more stable coins kind of coming out into the market. But they're so I think that's probably the biggest one, and I think for most of, I mean, myself included, and I think so many people just feel, are they comfortable with holding stable coins kind of long term, and so they are going to become common, and I think they're slowly people are realizing that you can long term keep your value in those stable coins.
Okay, what do you think, Kevin? Where's the blockage?
Blockage is, as Tim mentioned, then also friction. Like the amount, to anybody who's in crypto, just using an exchange is kind of just child's play. But I have so many clients and people that just want to buy stables in cash, just because it's almost like they're technically savvy enough to do it. They just don't want to do it. They don't want to go to an exchange. They don't want to have the friction with the banking system. They don't and trying to get their money onto an on-ramp. They don't want to learn how to make the trade, so they just want the coins. So if you can, and I know that YieldTap has an on-ramp facility and different things coming soon, so right, so when these rails are in place, they'll be easy. But obviously the regulations don't make it easy. It's country to country, sometimes state to state, so it's very, very people are lazy. Even though there's high yield on offer, they just don't want to. The general retail participant doesn't want to go through that friction, and then it's kind of because they haven't done it before, they kind of they're just a little bit unsure.
Yeah. Well, let's kind of jump back into the wider market. I mean, Piotr, you look at all kinds of trends across the entire market. I mean, outside of flagship Bitcoin, even Ethereum, what do you think the next few months is going to look like in the wider market? And, does that, how does the whale picture fit into that, if at all? I'm kind of talking about altcoins and that kind of space,
But still, we're staying in the cryptocurrency space, yeah?
Well, I mean, go wherever you want. I mean, if you want to talk about anything else.
Yeah, because actually, I believe there is many more factors. Let me just go back to the thing you spoke about with the stable coins, because not recently actually, but before this crash, when the prices of Bitcoin were on the 55K levels, I ran a poll on my Twitter. There was 8,000 votes, and I asked people how many stable coins you have in your wallet. What's the percentage of your wallet is in the stable coins? And there is a vast majority of people had zero stable coins. Even if you're asking why people not buying stable coins now, because they were not even ready to sell their stable coins when we are on the top. Crypto convert them to stable coins, and now because probably they're in loss now, they're thinking actually they can just maybe buy an average price at the minute, because if they didn't do that when they could, and they could really get some good portion of their profit, and then now they can just use these DeFi products and be pretty happy during these times. They are just I don't think they're ready mentally to do that. People need to be educated that stable coins are very important part of the portfolio.
90% of my clients, they ask me for a high yielding, low volatility portfolio, and they have no stable coins. They have all altcoin exposure. And a lot of these people are very, very savvy, smart business people, but they just don't add any stable coins to their portfolio. So I would argue the backbone of the majority of portfolios needs to be in that configuration. But people don't want to do it. They just want to, they don't think that's a smart thing. They get told that you get laughed at almost if you have a large amount of stable coins on your portfolio. But like most people don't have the skill set to navigate the market, as we discussed before. You kind of touched, Piotr, on kind of what you kind of your vision on kind of how you see, the skills that you need to be able to time these things and capture the swings. Most people don't have that skill set, and it takes many years to get that technical, fundamental kind of sentiment analysis and all this stuff. So stablecoins for the win for most people, in my opinion.
Yeah, I mean, I know we did a little bit of on-chain well, not on-chain analysis, but on-platform analysis, and we saw that during the really big aggressive kind of dip, we did have pretty much, I think, Tim, correct me if I'm wrong, we had a kind of record-breaking inflow of stable coins during that dip. But, of course, our users are people that are aware of the ecosystem. But, I mean, in your view, Tim, what do you think is the future for stable coins, but also for kind of strategies in general, as Kevin was just mentioning there?
Yeah, what are the future of stable coins? Well, it is a good question. I think that, and people are going to be, scared off for good reason. These algorithmic stable coins that keep having these massive issues in all these DeFi products that we keep seeing. I mean, these are naturally going to be scaring people off because they're supposed to be pegged, and they're losing peg, and some of them even fell to almost nothing. So, I mean, to me, if you're going to hold stable coins kind of long term, I would go a fully reserved stable coin, and if you're especially don't want to take a risk, I mean, I would take that. I would recommend either like a Paxos or like a USDC stable coin if you're planning on like a multiple year holdings. I think that's the most transparent, but there is a lot coming out, and a lot of exciting developments happening in the stablecoin scene. But it is so new, and like it's grown. The amount of stablecoins in existence has grown, I mean, exponentially over the last year. I remember when Tether kind of hit $1 billion. They had $1 billion minted in Tether, and that was really not that long ago. And now we're over 60 billion now. So it's it's going to keep growing fast, and I would imagine that people are getting more and more common that they will hold it in their own wallets, and once people realize it is digital money, and okay, it is backed, and so it's very similar to keeping your money in a bank. But it takes time, right? Like anything, it takes time, education, as you guys mentioned.
Yeah, I mean, coming back slightly to where the kind of the whales fit into this picture. I mean, Piotr, earlier on, you were talking a little bit about kind of economic influences that might make a difference in coming months to the kind of activity we see on chain. Did you want to touch on that a little bit?
Yeah, let me share my screen because I would like to show you something, because I believe there is many people actually lack context of what's happening in the crypto space, especially not only on the crypto space, but also in our whole economics, because as we all know, there is a money printer goes brr, as a crypto space says, actually full speed now, and they are still saying for the next year they're gonna actually print more money. But the first thing we need to remember, what's the environment for the crypto space? Another thing we have to look at is negative interest rates, which are in many countries we still have a low, zero, or even exactly negative interest rates. So that means we have a loads and loads of free money in the market. That's why we have seen so incredible year in a S&P market, also in a Bitcoin market. We have a massive rally, mainly because we have a loads of free money in the market and negative interest rates. So it's a question, what will happen in a near future with those two measurements? Because anytime when somebody will decide that we are going to increase the interest rates, there is no doubt money from S&P, money from crypto space will start exit, for example, to bonds. And people will look that as a safe haven. Not at the minute, because the low interest rates is not good for bonds. However, it's very good for a stock market, for real estate, and I believe it's still good for a crypto space. So at the minute, it's still about to create our risk-reward strategy, because on the S&P market, we have an all-time high. And in my opinion, it's very, very risky to go in at this point. However, with a Bitcoin, we have a 50% down from an all-time high. So a relative risk to reward is slightly better. And if we look a little bit further than the next 3-6 months, we can say that the next 3, 5, 7 years will be huge for cryptocurrencies. Let me explain. Here we can see on a 1993 companies with a market cap, that's the biggest companies in the world, with around $100 billion. However, when a time passes, we can see that changes, and all these old companies actually giving the first places to the internet companies. At the minute, we can see, let me go back a little bit, we can see companies as a Microsoft, Google, Apple on the first places with a 1 trillion valuation. And why is that happening? Not only because money is being printed, but because actually those companies create bigger networks. And what we have to all understand, I believe, that the crypto space creating completely new level of a network effect. Because when internet came on the beginning, we had 2 modems. There was no much business to be done at this point. At this day, we have many different computers around the world, people making businesses, creating more value, and that's why valuations going up. That's why internet companies going up in this ranking. I believe next 3, 5, 7 years, that's gonna be a decade of the cryptocurrency space. And that's, I think, pretty obvious because I believe everything will be tokenized. Even everyone will be tokenized around the world. People will be communicating much easier. There are so many bridges now being built between different blockchains. And I believe this value that will be created around the internet, about actually every single thing around the internet, will create massive network effect, which will bring loads and loads of real value to the market. And so far, obviously, the prices will rise. But still, that's about the next 3, 5, 7, even a 10 years perspective. So I hope people still have in mind behind the head that just to keep some portion of their portfolio just for their retirement if that scenario would came into fruition. What do you think?
Yeah, I mean, that's an example that people use a lot, actually, comparing kind of cryptocurrency space to the internet, because obviously we had the huge .com bubble in 2001, and that was a time when Amazon's share price was around kind of $10, and then it crashed right down to, I think, like sub $1. And then it took like 8 years for Amazon to get back to where it was in 2001. There was a kind of a very long period where the internet was kind of really bedding in and becoming what it is. And a lot of people think that crypto could go the same way. I mean, Tim, what do you think about that argument?
Well, I mean, I think, we're quite early still. And so, I think Piotr had a lot of great points, but, for the average consumer, I think, I would always recommend not to not really get into trading too much. I mean, if we're very bullish in a long-term view of, Bitcoin and Ether, I think you just find, dollar cost your way in and just take a long stance. And we're at a kind of unique point where you can actually let those assets kind of work for you and keep accumulating more. But my family that's into crypto, I mean, I don't tell them to trade, just to lock assets up long-term period. And because I think most traders end up getting wrecked if they try to keep up with the Piotr's of the world.
Right. You've got to be Piotr to be able to, keep up with such things. I mean, I want to pull out something actually, and bring it to you, Kevin, that Piotr mentioned just now. He was saying that, when we see money printing, this is great for stocks and it's great for Bitcoin. But then when that stops, we see movement to bonds, and in your experience, like what kind of investors what kind of crypto investors are making that kind of move, like out of crypto and into bonds, if you feel that's happening at all? I'm getting at the whales here, really.
I don't think anybody with a brain would make that move right now. Like that's a good analysis, Piotr. One thing we should add to that is if you check the velocity M2 money, M2V, that's a good one to add to your your point, because the velocity in the traditional system just collapsed. There's no lending and borrowing, and then the velocity in the DeFi is absolutely on fire. So I don't think anybody with a brain is gonna, unless you need to buy a house, you need to do what I see there's just so much opportunity for stable yields. Why would you move at all? I just think that's just completely stupid. I buy a property, buy watches or cars or whatever you want to buy if you're going to diversify into physical assets. Like but buying bonds or even stocks, it's just stupid. It's just a waste of time. Like, because there's so much opportunity here. It's just to take a long-term approach. You can buy equity in some of these companies as well. So like, why buy a stock that you can't do anything with, you can't borrow against, you can't do nothing with it, you can't yield on it? It's just a crazy move, and I don't think anybody that's smart or a whale in this space would be taking that approach. But maybe some of the retailers are, but the lower value people, but the whales probably all in on this space.
Okay. Do you agree with that, Piotr? Whales are all in?
Actually, don't you think that velocity actually eventually will rise? Because actually, I think that's lowering interest rate that actually it's a tend to cause this effect, cause bigger inflation, which we have at the minute, but still we need to see bigger velocity before we increase interest rates.
Velocity in traditional. It looks like it's on a big dead cat bounce to me. So it looks like it's just completely collapsed. If you look over the max period, like we haven't got the chart, but it's just crazy. The velocity in this space is just nuts. The lending and borrowing is just on fire. There's billions of capital just getting locked into every protocol that ever just opens up. So, there's just so much opportunity. And then if you don't want any of the hassle, you just use a platform like this one, Yield App, and then it's just easy. And they do all the hassle, you just take a diversified approach all around. Use stable coins, buy some long-term storage assets, manage your risk. Don't go all in on altcoins. And I think over a 3-year period, you'll probably be okay. But obviously, that's not financial advice.
Yes, quite. Yeah, to say that this is not financial advice, and we are not financial advisors.
Always financial advice.
I mean, but there is strong correlation, which Piotr was showing. There is very strong correlation, unfortunately, now between Bitcoin and the S&P 500, right? Which would suggest that you do have a lot of big holders that are in Bitcoin and stocks, and they're kind of one and the same. Or is that just a coincidence?
No, I don't think it's a coincidence. Actually, people are looking because money losing value. People looking at the places they can save their money. Some people buying stable coins, using DeFi, using Yield App, using different apps, and they're protecting their wealth. And that's before we think about profits, people must, I think about their holdings to protect them. And people are actually looking for that, and are looking for a different ways, because holding cash at the minute, it's just a not really good idea, especially in bank when it's losing value if it stays in the bank. So people looking on that. Looking at the stock market, it's much easier now because we have a Robinhood, for example, app. So even kids after high school can go and buy stocks from a mobile phone. It's so much easier. Same as crypto. Never. Yes.
Holding cash in a bank is a guaranteed loss. So anything else you do, you pretty much get your money, put a portion in Yield App, put it in whatever platform you want that's safe and has a decent CEO and team and security behind it, earn some yield, and you're not guaranteed a loss. Yeah, there's a risk, but it's not a guaranteed loss. So you need to look. I always encourage people to look at it. The bank is a guaranteed loss of 10, 15%, whatever you want to say.
Yeah, that's the good one. Yeah, guaranteed loss in the bank, that's for sure.
Right. I mean, that's the interesting thing, isn't it? I mean, we focus a lot on education at Yield App because, most people, cash is a physical asset, so people feel comfortable with it. But most people are not aware that when you actually take inflation into account, the cash that you have in a bank account is losing value every single year. If inflation is running at 2% a year and your interest rate is 0.4% a year, your cash is literally losing 1.6% in value every single year. But it's very difficult to get people out of that. Well, the cash is physical, it's in my hands, that kind of safety. And even me, I still go by old school financial advice strategy of always keep 3 months of expenses in hard cash, which probably is I don't need to do. But even me, and I'm in this space, changing mindsets is the challenge, right?
Yeah, it's and I think you're being very generous, Rebecca. I think we're probably talking more 10 to 15%, loss. So that's probably more where we're at. So yeah, we can have that debate another time. But yeah, and there's just kind of education on kind of the balance in the bank is just a digital balance as well. So it's just a representation of what you have. But I agree with what you said. People should keep a good portion in cash just for of your overall portfolio, just in case things go wrong or you need to access money. There is some sort of friction on the off ramp sometimes in off ramping large amounts of money, should I say. Off ramping small amounts seems pretty easy, but yeah, keep some cash, but the bulk you need to look to deploy it.
All right. Well, listen, we're at time, so I want to wrap it up. So I want to get some final thoughts on kind of whale activity or general activity, coming up over the next few months. Pick your time frame. Crypto, 24 hours is a long time, but Tim, we'll start with you. What do you think?
Well, I think that we're probably in for another downturn in the short term, but I think I would say the bull market seems to be likely intact into the fall. So looks to move that way at the moment. So again, we can only see what we can see in front of us.
Okay, that is a very non-committal politician's answer. Excellent. Okay, Piotr.
What I can see on the charts, actually, I believe that the most probable scenario is a 30K, this is a 29K, is a really, really solid bottom. And if we will have any further downside, that's going to be very, very quick. So I'm not really preparing for that. I'm rather staying calm at the minute, staying a little bit aside from the market. However, I would recommend to be cautious and in the same time be ready, because if we will see recovery, it will be rather slow, but I think the rest of the year, third, fourth quarter, will be pretty promising for crypto, not financial advice.
Okay, all right. Kevin, you get the last word.
Yeah, I agree with both of them, and then both those points, I think they're fair. I think be prepared for downside, because I think it's looking, in my opinion, it's more probable than not, but how quick that downside is, who knows? The bull market looks intact to me until it invalidates itself, and that's going to be a breach of 20K and no recovery. So just stay cautious, don't rush, take your time, earn yield at the same time, keep your portfolio intact, and then you can always buy back in when if we do confirm the uptrend. So there's no need to FOMO, no need to do anything silly, and just be very patient, because the patience is what the human brain can't deal with, and the time element. So just be cautious at the moment, but it's a lot of opportunity on the horizon, and for all the businesses in crypto and the market in general. So just double down on your learning, and at the moment.
Patience is a virtue, and hold on for dear life, everyone. And stay in your high yield app accounts while you're doing it. Thank you so much for joining me, Tim and Kevin and Piotr. Thank you for your time. To all of our viewers, I'm sorry again for our technical glitch at the beginning of this show. It's seeming that something happens every show, so perhaps we'll start some kind of competition giveaway on the technical glitch of Fridays with Yield App. But thank you for bearing with us. I hope you enjoyed the show. Please do give us any kind of comments or feedback. Let us know what you like, what you don't like, and we might do a show on it. So thanks everyone, and we'll see you next time.
Thank you.